Okay, what's up everyone? This is Scott here again with my next live trading video. Today is Monday, April 25th, and two things I want to do in today's video here. Number one, I'm going to sell some puts on Micron, and I'll show you why here in a second. And then also I'm going to place an earnings trade on UPS. So first off here, let's take a look at QQQ. This is an ETF which tracks the NASDAQ, and we'll go ahead and zoom in a bit on this chart. And so as you can see right now, the NASDAQ is stuck trading in between this very wide range between a high of around $348 per share and a low of around $320 per share. And as you can see also, there were many days in a row where the NASDAQ was trying to fight to get above this point, this major resistance level, but every time it failed, and that's why we saw an eventual sell-off late last week, right? Because if the market simply refuses to go higher, or if it simply can't go higher, then that only leaves it with one direction to go, down. And so ultimately, now that we're getting pretty close to the lower end of this range here, I think perhaps now might be a good opportunity to play for a short-term bounce in tech stocks, right? Because the NASDAQ for the most part is comprised of tech stocks. And even though in general, in the longer term, I'm still pretty bearish on this market, but I still like to play for short-term bounces or short-term corrections. And that's why, again, right now, I think might be a good opportunity to sell a few put options on a few beaten down tech stocks. And so that's why in particular here, I'm going to be selling some put options on MU, which is Micron Technology, which if you don't know, is a tech company involved in the production of memory and storage units for computers. And as you can see, just by looking at this chart here, this is definitely one of the many pretty beaten down tech stocks. But as always, before we fully dive in here and I show you all the specifics of my trade and my analysis, in case you are brand new to the channel, again, my name is Scott, and I just want to let you know that you can also find me on SKILLSHARE as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. All right, so now let's take a deeper look at the charts here. As you can see for Micron, I've drawn in two support levels in white. The first one is right there at around $68 per share. And this one is definitely a much more local or recent support level because as you can see there, not too long ago, after this massive sell-off, Micron did bounce pretty hard right around this point at around $68 per share. And once more again, Micron has reached that same exact price point. And then on a more macro scale, as you can see over the past 1 year, the lowest price Micron has reached is right around $65 per share, which also acted as a very nice support level. Now, ideally, I did want to wait to see if Micron would come down and reach this lower support level. But again, with the NASDAQ, as I showed you earlier, getting very close to the lower end of that range, and then with tech stocks in general bouncing pretty hard today, I don't want to potentially miss this opportunity. Right, as you can see, at least so far, this support level is definitely holding very nicely, and Micron is bouncing very hard off that point so far today. However, with that being said, I still do want to be on the safer side of things with this trade, and so that's why the put option strike I'm going to select here, I'm going to make sure the strike is going to be below both of these support levels. So that means I'm probably going to choose a put option with at least a 65 strike, or I should say at most a 65 strike. And in that way, if this support level here breaks and Micron does move lower, then perhaps it will bounce off this one here at around 65 or $66 per share. Moreover, let's come down here and take a look at the implied volatility for this stock. As you can see here from the most recent sell-off, we've had a very nice spike in the implied volatility, or a spike in uncertainty about the stock's future. So right now, the implied volatility for Micron is right around 57%, which translates to an IV rank of 64%, not bad. And also an IV percentile of 91%. That's very high. So right now the implied volatility for Micron is on the higher end of its range compared to the past year, which means the prices for Micron options are much more expensive than usual. And therefore, as an option seller, this is going to make it a great opportunity to step in and sell those options. So therefore, let's now come over to the trade tab and take a look at the option chain here for Micron. For this trade, I'm going to go into the May monthly cycle with 25 days left to go. We'll unfold that tab. Typically, when I sell options, I like to be under 30 days till expiration. And then coming over here to the put options, like I mentioned, I do want to be a bit on the safer side with this trade. So that's why I'm going to choose these 65 strike put options and give myself much more cushion to the downside if Micron continues to move lower. So with that said, I'll go ahead and click on the bid price here, and that brings up a sell order down below. Going to sell 2 of these contracts, again, 65 strike put option, and I'll try and do so for a price of $202 per contract. And then lastly, we'll go to confirm and send here and take a look at the buying power effect on this trade. It's about 1,800 bucks. That's totally fine. Well under 5% of the account value. So then we'll go to send. And there we go. Just got filled at 201. I had to come down by 1 penny there to get filled. So that's great. And then next step here is to create my automatic closing order on this trade. So now I'll click on the asking price. That brings up a buy order down below to buy back both contracts. And as usual, I'll try and do so for half price. So if I sold these puts initially for 201 bucks as a credit, then that means if they ever come down in price to a value of around, let's say exactly 100, then I'll buy back the contracts and book my profits. Now, in terms of how I'm going to manage or defend this trade if things go wrong, for this position here, I'm going to manage it in my usual way, where if, let's say, Micron falls down in price and goes below 65 bucks per share, below my put strike, at around that point, I'm going to short 200 shares of stock, right? 100 shares per contract to cover these initially naked put options. And in that way, if the stock continues to push lower after that, it will not matter. I could still be profitable by the expiration date, or then if Micron recovers, at some point I'll buy back the short shares of stock for a small loss and carry on. And that's actually what I've already had to do on my Nvidia and my Coinbase positions. So for example, let's take a look at my Coinbase trade. And for this position here, it's also a simple naked put option, but in the May 6th expiration cycle with only 11 days left to go. So I'll unfold that tab. And as you can see here, my put strike is at 140, but right now the stock is trading at only about 132 bucks per share. So as of right now, I'm still short this put option, but I'm also short 100 shares of stock to cover the contract. And again, if by the expiration date, if Coinbase is still well below my put strike, it will not matter, and I'll still have the opportunity to walk away from the overall trade with a net profit. And so that means the last step for my Micron trade, let's come back to MU, and then we'll go back to the regular May monthly expiration cycle. The last step here is to create my automatic short selling order if Micron does fall below 65 bucks per share. So now I'll come up to the current price of Micron and click on that and then go to sell. And down below that brings up a sell order to short sell 100 shares of stock, but because I sold 2 contracts, we'll make this 200 shares of stock. And then also we'll change this from a simple limit order to a stop limit order. And for the stop price, we'll say that if Micron falls down to a price of perhaps $64.50, at that point this order will become active and try to short those 200 shares. And then for the limit price, we'll set that to, let's say, 64 bucks per share. And then also we'll change this from standard pricing to mark pricing, and that's it. So now I'll just confirm and send this order here. And again, that order will automatically short sell 200 shares of Micron stock if it falls down to a price of $64.50. And if that does happen, at that point, I'll create a buying order to buy back those shares if it does recover back above 65, above my put strike. And then in that case, I'll take a small loss and carry on. But obviously this stock still needs to fall by about another $5 or so before I even need to worry about that. So we'll just wait and see what happens on this trade here. Okay, I'm back here again, still on the same day, Monday, April 25th. And like I mentioned, the second thing I want to do in this video is place an earnings trade on UPS here. So basically, once the market closes today in about 1 hour, UPS is going to release their earnings figures for the past quarter, and we'll see how the stock reacts to those numbers. Now, in terms of the exact trade I'm going to make here, it's basically going to be a short strangle, right? Which is a combination of selling both an out of the money call option and an out of the money put option at the same time. And I'm going to make sure I pick the strikes of both those contracts to be beyond the expected move for this stock once those earnings figures do come out. And ultimately, the main thing I'm shooting for with this trade is to play for a large contraction in the implied volatility. So if we come down here and take a look at the implied volatility for UPS, as you can see, right now the IV has expanded to the highest point that it's been in the entire past 1 year. So of course, that's why we're seeing an IV rank of 100% and also an IV percentile of 100%. So essentially, this means there is a lot of uncertainty surrounding this earnings announcement for UPS. And as a result of that, like I explained with the Micron trade I just made earlier, that means the prices for UPS options are going to be extremely expensive right now. So of course, that means once I place this trade, I'm going to collect a very nice credit. And then also, once those earnings figures do finally become public, all that uncertainty is going to go out the window. And that's when I expect to see a very large crush or contraction in the implied volatility. And you can see that again with the chart down here very blatantly with their previous earnings announcement, right? Leading into the announcement, we saw a very large buildup of implied volatility. And then once those earnings figures got released, boom, a huge contraction. And same thing with the earnings announcement previous to that, right? Leading into the announcement, another very large buildup of implied volatility. And then same thing. Once those figures got released and they became public, there was a very large contraction of the implied volatility. So ultimately, if you sell options at around this point, or around this point, or especially now at around this point, when they have their highest prices, and then once the implied volatility gets crushed thereafter, that's also going to crush the prices of those options. And that's what you want as an option seller, right? You want to sell your options at very high prices and then buy them back at very low prices and make the difference there as your profit. Now, that being said, this only works though if the stock, once the earnings figures become public, if the stock moves within or less than the expected amount. But sometimes when there is a surprise earnings announcement and the figures are much better or much worse than expected, sometimes the stock will move by a huge amount, and that's where you're actually going to lose money. So of course, there's always risk in anything you do in the markets, but generally speaking, from my past experience, the majority of these kinds of trades do usually work. And so in this case for UPS, if we come over to the trade tab here and take a look at this number right there in yellow, plus or minus 17.19 almost. This is the 1 day expected move for UPS. So based on that implied volatility, right, based on all this uncertainty around this earnings announcement, the market is pricing in an expected move either up or down for UPS stock of about $17 and call it 30 cents. And like I mentioned, most of the time from my experience, these trades do usually work out, meaning the stock does usually move less than what is expected. So for example, if UPS instead only moves by $5, either up or down, doesn't matter, then you're pretty much guaranteed to see a huge contraction in the implied volatility and therefore all the prices of UPS options to come down significantly. And then of course, that would mean for your position, you would have a profit on your hands. And so for this trade here, let's go into the May expiration cycle with 25 days left to go. And so keep in mind that right now UPS stock is trading at $187 per share. And the expected move is, I'm going to round up even more and call it $20, either up or down. So that means for the call side here, for the call option I'm going to sell as part of this short strangle, I'm going to choose my strike to be at least $20 away from the current trading price. So 187 plus 20 is 207. But to be even safer with this trade, I'm going to go even further than that and go to the 210 strike call option. So I'm going to sell this one here. And then on the put side, same kind of thing. I'm going to go at least $20 away to the downside for my put option. So 187 minus 20 is 167. But again, to be a bit safer, I'm going to sell the 165 strike put option. And so again, what I'm hoping for is for UPS to move in either direction, but somewhere within this price range. And ideally, the smaller the move, the better, right? Because a smaller move means a larger contraction in the implied volatility and therefore bigger profits on the whole trade. So now I'll go ahead and right click on the call option here and then go to sell and strangle. And here we go. This is my sell order to sell one contract of the 210 strike call and the 165 strike put option. And total credit is going to be about $520. So actually I'll come down to maybe 515, lock in that price, and then go to confirm and send. The buying power effect for this trade is about $1,800. That's totally fine. So now we'll go to send. And there we go, just got filled at exactly 515. Awesome. And then finally, we'll go ahead and create my automatic closing order for this trade as well. So we'll go to buy and strangle again. And here we are. This is my closing order. Going to buy back both contracts. And as usual, I'll try and do so for half price. So half of 515 is about 255 or so. And then make it a GTC order so it's always in place. And confirm and send. All done. And so for this trade here, because it's an earnings trade, I'm going to manage it a bit differently. I'm pretty much just going to hold on to it over maybe 1, 2, or 3 days at the most and try and squeeze out as much implied volatility contraction as I possibly can. Although, of course, if the stock does move by a huge amount once these earnings figures come out, then tomorrow morning, I'll just take it off and cut my losses. So with these trades here, in my opinion, you definitely can hold on to them for the duration of the expiration cycle if you want to. There's definitely nothing wrong with using an earnings announcement to set up a more long-term trade, but also you can use these kinds of events to place very short-term trades and try and make a quick profit or cut your losses very quickly and just move on. And so I will also make a follow-up video later this week to discuss the outcome of this trade, so stay tuned for that. But that's going to do it for this one here. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my SKILLSHARE courses, links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up. drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.